So what's the market expecting to hear from the Commission in just under an hour's time? Well, I'm joined now by MF Global's co-head of European Equities, Simon Maughan. Simon, thanks for joining us today. Now, whatever else is said, the headline that is causing the most concern is this idea that the banks may be broken up. Obviously, we're not going to hear very much about that today, but we do know that it's number one on the agenda, really, isn't it? That's the main thing they're going to be looking at.
Absolutely, but the flesh of the introductory report that's been put out today clearly spells out a large number of alternatives to actually physically breaking the banks up. There's been an awful lot of focus on the separation of investment banking and retail banking, but perhaps what is really interesting in today's introductory report is that detail about the retail banking market and the fact that we have a very, very concentrated retail market in the UK. And it won't just be the separation of investment and retail banking. The Commission will be saying, are the retail banks too big?
No, of course, this is a very dangerous, they're kind of putting their toe into quite dangerous waters here, because we've actually had banks already come out and say, look, if you're going to do this, we'll go elsewhere. You know, we're not going to be bullied like this. And actually, unless this was some kind of global decision, it's very difficult to see how it would work. Do you think that we're likely to see proposals that just say, here's a split? Or do you think, as you've pointed out there, that the idea that there should be more competition, perhaps within the retail sector, is going to take up more of their time?
Well, the reality, this is a very wide-ranging review that, with a lot of distinguished people running it, and therefore they're going to want to say something, and they're going to want to say something different from what the rest of the world is saying. But we have to be conscious we operate in Europe. We break our banks up into tiny little pieces. The European big banks will just come and swallow them up, and we'll be back in a big bank world again. So I suspect what we will see, guessing a year's time from here, is what's called subsidiarisation. We will separate retail banking from investment banking, but within the same bank holding company. So you won't actually get a breakup. HSBC Standard Chartered won't have to go through with their threat to leave London.
Now, John Vickers did say, as you said, illustrious names on that committee, and they're obviously going to want to say something and have a really good look at this, a kind of a root and branch look. He also said today, interestingly, that the risks from asking hard questions are not as great as the risks of not asking those hard questions, looking at banking stability. Do you think that some of those hard questions are going to be around the fact that if you like, the poorest, the lower incomes, very often end up paying the most in terms of interest rates?
I think they will absolutely look at these issues, and I suspect that the slightly surprising element of today's report is just exactly how much time they are going to be deep diving into the whole retail banking space. But it's interesting because the Department of Wealth and Pensions now makes loans available to people at what they consider to be the bargain rate of APRs of 30% plus.
Yeah, so actually that's a very good point, because really it's not just the banks here that are
the government themselves are charging people an awful lot of money to borrow. It is a very risky area, and whoever's lending the money, government or banks, they are showing they need to be compensated.
Indeed. Now, one of the other issues, of course, that's going to be looked at, and particularly in the light of what we heard Vince Cable say this week, and indeed having the Liberal Democrats in the coalition, is this idea of fairness, the idea that taxpayers should never again be asked to bail out a bank. Do you think that we're going to see sort of specific proposals to that end?
I do, yes. And it's going to be very, very difficult to push through. The reality is that bondholders, the owners of the debt in banks, are treated differently to the owners of debt in any other company. If a company outside of the banking sector goes bust, the bondholders get some pence in the pound back. Here in banking, you get bailed out in its entirety. That has to change, but it's going to be very, very difficult, and the fixed income, the bond market is going to resist that aggressively. I think it could take a number of years to iron that out.
OK, Simon, I know this is a subject we're going to be returning to. Please come back and talk to us again. Thank you very much indeed.